Hi there, welcome to Better System Trader, the show where we talk about all things systematic and algorithmic trading. And boy, do we have an episode to share with you today. We're going to be talking about trading decisions and how do successful traders make better trading decisions. And our guest today is Matt Zimberg from Optimus Futures. Welcome, Matt. Great to have you here.
Thank you for having me. Great to be here. Thank you.
Now, I'm really excited about the chat today because we had an off-air discussion last week about what we're going to talk about today, and you've raised a lot of good points. So I'm very excited to be sharing this with our audience. But first, to give, I guess, the discussion a little bit of context, do you want to just share a little bit about yourself and your background so that we can see how this is driving our discussion today?
Sure. Again, thank you for having me. It's a privilege to be here. Really appreciate it. Before we start, because I'm a licensed broker, I want to start with the disclaimer that everything that I'm going to tell you is my opinion. It's based on my experience. There could be other people with other opinions, and based on their experience, when I think you should be exposed to a number of opinions out there that you decide what is good for you and what to adopt. Because I'm in the futures trading business, I just wanted to tell you that there's a substantial risk of loss in futures trading, and past performance is not indicative of future results. And when it comes to futures, you should trade only risk capital. I started in the business probably about 25 years ago. I was in my mid-20s, and I became licensed at the time. And I was a branch manager, a risk manager, a salesperson. I worked in many capacities in this industry. And somewhere around 2004, I decided to venture out and build Optimus, and I've been independent ever since. Most of our customers are self-directed trading customers. We also do some algorithmic trading through the venues that we discussed. But for the most part, we service self-directed traders. And the experience that I've gained over the years was because I'm always engaged with people in the industry, and I'm engaged with customers. So I get a lot of feedback. I get feedback from people who are not that successful. I get feedback from people who are very successful. I try to make it an experience, observe the information, and share it with others. So there we are today, kind of a brief history.
So we're going to dig into some of that, I guess, the insights and the knowledge you get from, those two groups that you mentioned, the speaking to the not so successful traders and also the successful ones. And I know you've got some really interesting insights to share with us. So as I mentioned at the start, we're going to be talking about decision making and how successful traders make better decisions. So I just want to start off with a really, I guess, a kind of a basic question, and maybe there's an obvious answer, but I think maybe as well there's kind of different levels to it. So, how important is decision making to trading and the trading process?
It's extremely important. Um, you before you get to learn about trading, and I mean the technical side of any asset class, how it's traded, the hours or the contract size, or any method that you want to adopt, whether being a trader, investor, swing trader. You really have to understand the process of decision making in this business. And that has to do with more what are you going to engage on a daily basis? What kind of decisions are you going to make? How will they impact you? How are you supposed to respond to certain situations? So you really have to start thinking of trading as a decision making mechanism, as opposed to I want to be a trader and I
Mm,
want to make money, because everybody wants to be a trader, and everybody wants to make money. But you really have to engage in what decisions do I have to make on a day to day, and what is within my strength. So basically, you have to decide what are your strengths in the decision making mechanism. And I know it sounds a little bit vague, but you can go very deep into it. You can be, um, for example, you can have a strength of being a great visual person. So you can spot patterns on charts. Now you have to decide, well, how will I make my decision based on that? Or you can say, I'm really good in math. So I'm really better in putting all the information into an Excel spreadsheet and evaluate what what trades I'm going to take then. So it's really important to understand your strength, the decisions you're going to make, and basically what are the implications of the decisions, specifically in trading. You have
Yep.
technical decisions that you have to make, and you have psychological decisions that you have to make. And that will determine basically, and the amount of, not the amount, but the quality of the decisions you will make will determine your success.
Yep. Okay. Well, before we jump into, I guess, digging into more about the decision making process, um, when you look at some of these unsuccessful traders, what type of mistakes do you see these traders make around the decision making process?
I want to be, I don't want to discourage anyone, and I just wanted to say that trading is a challenging endeavor. Nobody's born a good trader. So I would say some people struggle. Some people, I'm not saying it's for everyone out there. That's definitely not what I'm saying. But
Mm,
when I'm saying unsuccessful is that, there's some sort of an evolution you go through. Nobody's born a good trader. Nobody approaches those things and from day one, he's just rocking. There's always some sort of a challenge. And if you're rocking on day one, you might not be that good on month 3 or year 3. So there's always challenges in trading. I don't want to discourage anyone, and I would say you have to understand. So let's call that, a group that just approach trading and they're just beginning their journey. So
mm.
back to your question, can you ask me that question again?
So, what mistakes do you see unsuccessful traders making in their decision process or decision making process?
Okay, so one of the mistakes that they do, um, I would say, first of all, they don't understand truly the game of trading, meaning that the full scope of trading, the scope of the decision making that they'll have to do. That's first mistake. Second mistake, I would say that they're coming when they come a little bit unprepared. So when you're not coming prepared, what happens is you let your emotions take over. In anything in life, by the way, in any field, if you approach any problem solving endeavor, and definitely trading is one of them, and you don't understand the full scope of what you're going to deal with, there's going to be a lot of emotions that are going to filter into your decision making. And
Mm,
emotional decision making is based on intuition. And intuition is of what we experience. Sometimes it's very counterintuitive to what you really should be doing. So you should be doing one thing, you end up doing a different thing. So that's one of
mm,
the mistakes, being unprepared. Okay. So people say, okay, I know I need to be prepared. Yes, you do. Because if you don't, again, emotions will start sipping into your decision making. And if there's a lot of emotional decision making in what you do, it's not going to end well.
mm,
Also, in the trading game, I think you have to kind of respect your opponents, meaning that who are you trading against, right? And there are people out there who are extremely intelligent. So you're getting into a chess game with very intelligent people, and they want to get the same thing that you want. I mean, they have the same goal, right? The you know, I don't like to talk about the money in trading because everybody, that's the end result of doing something good. That's a byproduct of good decision making, whether in business or in trading.
mm,
But I would say that, you know, you want to be prepared and not underestimate the players um, in the field. And again, again, like I said, they're very intelligent. Some of them are very smart. Now a lot of people think that, the institutions, always have the best traders. That's not always the case. There are people out there who could be at home traders, and they're very intelligent, and they make very good decisions, and you're trading against them.
mm.
So what you want to do is really respect your opponents and not treat this unprofessionally. Let's just keep it at that. I'm
Yep.
going to make sure. I think you asked me that question. So Oh, okay. So I spoke about those two things, not planning and, but I also wanted to mention another thing here is that, a lot of people fall in love with trading. Like sometimes I would come across situations a person would say, I reviewed over the last week what is day trading, and I know this is what I want to do. And I'm like, well, again, I don't want to discourage anyone. As a brokerage, we obviously rely on people trading. But at the same time, I wanted to say it's very hard within a week or even within a month to understand the full scope of what you're getting into. So I would say that don't fall in love with trading, right? What
Mm.
I'm saying is don't be emotionally attached to it. Treat it as a cold business of decision making that will have a lot of ups and downs. And
Yeah.
I would say if you approach it that way, then you're going to be up to certain challenges. And so hopefully you'll be less, you won't go emotionally through ups and downs. That's at least what I hope in giving this advice.
Yep, yep. So you made two very interesting statements here, and I see in the chat, Huz or Hutz, put this one in. What is the full scope of trading? And you also use the term, people don't understand the game of trading. I think you kind of were touching a little bit on that towards the end of the last question, but can you explain what is the full scope of trading, or what do you mean by the game of trading?
So the game of trading has a lot of components, right? It has strategic decisions that you will make, which is basically what method are you going to employ? What are the advantages and the disadvantages of this method, right? So let me give you an example. Let's say you decide to day trade, right? Okay, so now you decide to day trade. You can have one definition of day trading. You can say, okay, I only trade during the day and there's no overnight trading. But that's only 10% of the business, right? 90% is having the tools to make decisions in a fast environment. Now you're only day trading, right? So imagine somebody who was a long-term investor for 5 years. He doesn't care if the stock goes up, down, go sideways. And by the way, in futures, I don't believe in long-term trading, so I'm using other asset classes. Because it's leverage. When you deal with leverage on futures, it's a totally different psychological game. But let's assume that somebody does not have the time, right? So he sticks some money in some stocks, and it is what it is. As opposed to, let's say, somebody who day trades stocks or futures on leverage. Now he has to make decisions in a very fast environment. You got to be able to evaluate really fast something, right? I don't know what you're trying to evaluate. Now, let's use an example. You're trying to evaluate an overbought market or oversold market or a momentum market. You want to be part of the trend, or you want to maybe trade counter trend, whatever you decide. Now, you have to say, okay, what decisions do I have to make during that? And what is attached to it? So, for example, so that's the technical part, right? That you think about that. And then you say, okay, what happens when it doesn't go my way? That's the risk management side, right? Now you start thinking about, okay, what if it doesn't go my way? What do I do? When doesn't it go my way? When do I know that I'm right? And when do I know that I'm wrong? So let's assume you get into a trade. I'm in the futures business, so I'm going to use that as an example. Let's say you're up $100, right? Okay, you're up money, but you're not out of the trade yet. Now you have to evaluate, even though you're making money, have I made the right decisions? Is the market doing what I expected it to do, or just give me $100 by fluke? And there's an accident here, and the market just stopped. Or should I continue? Right? When you think about all the scenarios that you're going to encounter, then you have better. Again, you have, in my opinion, I should say, you develop a better picture of your decision making. There's the other side of saying, okay, it's risk management, right? Okay, so now you say, okay, well, when things don't go my way, when do I know it's not going my way? Just because you're losing money doesn't mean that the trade is necessarily bad. But staying in a trade, for example, for half an hour, when you use 5-minute indicators, then, is that a smart decision? I mean, you'll be the judge. I don't think so, again, my opinion. So you have to think about the strategy that you're going to employ. You have to think about the risk management. Now the day ended, right? Okay. So you have a choice now. You have a choice of, do you evaluate your trading? Um, how do you evaluate your trading? Then you have to think about, because a lot of people think, well, the day is over, it's over, right? But it's
Mm.
not, because maybe you need to prepare for next day trading, right? So now you have to say, okay, what decision am I going to make tomorrow if I encounter, same markets or different markets or things of that nature? And this is what you do daily. And it's boring. It's boring. Like, people get into trading because they think it's super exciting. It's a boring profession. And not only that it's a boring profession, it's a lonely profession, because it's only you, and you. I mean, it's, you have your nature, you have your risk tolerance, you have everything. I know that everybody is always interested in knowing what everybody else is doing. Are they buying something, or are they selling something, or what the market, but in reality, they should be looking at the market at themselves, right? So you have the evaluation process. And then you choose periods to say, okay, when do I fix things? Like, if you've done things well, fantastic. If it didn't go your way, how do I fix it? So again, when you approach it from now, if you think about everything that I'm saying here, it's not necessarily, it could be applied in many fields, right? Could be
Yeah.
applied in many areas, maybe not the overbought or the sold, but it could apply for somebody who's doing something else, that you have to evaluate things, right? So again, that way you'll start understand, the process. And in that process, the best thing that happens is that you get to know yourself. You do not know yourself until you start trading. We all come with baggage, emotional baggage into trading.
Yeah.
You could come from certain, religious backgrounds where they taught you that money is bad.
Mm.
Or you could come from an entrepreneurial family, or you can come from a family that struggled, right? So everybody brings their own DNA into this game. And you have to decide, okay, where do I belong in this game? And this is why I'm saying you have to understand the full scope of trading, understand the decisions that you're going to make. And that's the way it should be done, again, in my opinion, because it leads to cold and calculated decisions. I hope I answered the gentleman's question.
Yeah, yeah. So you were talking a little bit there about the, I guess, the motivation or the driver for trading, and some people do it because it's exciting, or they have some expectation about monetary income and things like that. Do you think that those motivational drivers or factors are different between unsuccessful and successful traders, or do they change over time, or how do you think that works with being a factor in trading?
Well, again, everything that leads to success is a path, right? So people can start one way, and it can lead, they can start with one decision making, but then they're intelligent enough to realize, what, this is just not working.
Mm.
Maybe I'm emotional, I'm not approaching it right. I trade way too many methods, try to capitalize on every move in the market. People know when they're emotional. I give enough credit to people, they
Yeah.
know when they make decisions based on, psychology. I would say that successful traders, their main goal is, first of all, risk management. If we truly believe that nobody can predict the market, the only thing you can do at that point is really have the best risk management plan to say, what happens when things don't go my way? How do I control that? So I think, good trading and good decision making is part of risk management. So I think people in the transition from being amateurs to professionals, I think the aspect of risk management will start playing a much bigger role.
Mm.
Also, you start believing in your convictions, right? At first, when you start out, you're susceptible to a lot of beliefs out there, right? People throw at you different ideas. This is good, this is good. And people would ask not such intelligent questions. Um, don't want to and again, it's easy after 25 years to be, to say you should do this or you should do that. It comes with experience. But again, my goal is not to put down people who ask such questions, but really tell them that it really doesn't matter. Like, they would say things like, what is the best day trading indicator, or what is the best moving average for a day trader,
Mm,
and there's no such thing, really. It's the tools that you create and work for you, and the risk management that you apply. And again, it should be a very individual thing. So I would say, successful traders have a very strong conviction about what they do. So they might start out being influenced by books and courses and all kinds of gurus, and at some point they say, you know what, they're just, excuse me for my French, they're full of shit.
yeah.
And you know what, they're all saying the same thing. I want to, here are the things that have worked for me, and I'm going to stick with them, right? And they went through the process of, some good traders even have gone through the process of being good, and then they wanted to make it better, right? So they started adding things on top of what they traded, and they
Mm,
realized, you know what, more is not there. So again, in the transition, of being a better, let's call it being a better decision maker, you start sticking with your method. The
mm,
third thing I would say, that good traders, which is really important, they filter information. They know how to filter useful, resourceful, and practical information. So if there's a lot of education out there online, whether free or paid or videos or whatever the case is, right? So as we said, in the beginning, you're influenced, you know, an experienced guy can come and say, no, this is just baloney. This is not true. Not watching this, not looking. So you start filtering the information that you're getting from people. Like, I'm at this stage, right, of business, personal life, and everything else. I don't care about everybody's opinion. There's certain people that will add a certain perspective to my life or my trading or my thoughts about my business that are practical and I value, and I didn't consider it before. And
mm,
again, that's also part of decision making, right? If you're letting a lot of information out there influence you, at the end of the day, it's very hard to make decisions. Like,
mm.
imagine making decisions with 50 variables or with 3 variables. So if you remove 47, which are irrelevant, and you stick with the ones that are relevant, I think you'll become a better decision maker in trading.
Mm. So how do you actually determine which ones are relevant or not?
Pain,
Okay.
pain. There's no other way but pain. You see at the end what works and what doesn't. You
Yeah.
have to go through the exercise, and it's painful, right? So part part of decision making is going through painful experiences. Nobody likes it, of course, but your losses make you think twice about all the actions that you take. Like, you start thinking, okay, you know what, you have to be observant. Like, people have to be observant and conscious of their decisions. If you're observant and conscious of your decisions, you're starting to say, you know what, this is not working, this is not working, this is not working. And then you have stuff that does work. And then, you say, well, I've listened to this source of information and it helps me, and this source of information doesn't help me. And
Mm,
so you start understanding who is practical, who's giving you more practical advice. So sometimes it's through pain. And I think, the more experience you gain in futures, you start moving from the theoretical into the practical. Because there's a lot of theoretical that starts out when you start as a trader. And somebody
mm.
with 1% more than you sounds like a genius when you don't know anything in that field. In any field out there, if somebody knows just 1% more than you, they sound like freaking geniuses. And you know and you as a beginner, you're you know it's easy to impress you, right? but it's very hard to impress somebody who's been doing this for a very long time. So I'll give you an example. So when people start out, there's all those cliches, trade with the trend, let your profits run, cut your losses short, which is
Mm.
really great. It's good. It's good advice. But it's so hard to implement because they're not defined. Like for somebody who didn't deal with trading, cut your losses short. Well, immediately as you start, if the trade doesn't go your way, should you cut it out immediately, or you should lose 300, or should you lose 3,000? So at that point, you're like, okay, this is a good definition, but there's a lot more depth to that. So anyway, I hope it answers the question.
Yeah. So you mentioned a little bit earlier, in that process of at the end of the trading day, it's not over because you can go back and review your decisions. And then you also made a statement before that about um, just because a trade is losing doesn't mean it was a bad decision. So how do you balance the two? Like when you're doing a review of your trades for that day, and maybe they're all losers, how do you know that you made bad decisions there and that wasn't just, well, it is what it is. Sometimes in trading that happens. How do you
So
go on? Sorry.
no, all good. So first of all, journal things. Take a there's trading journals out there. We're trying to build one. We have a platform called Optimus Flow. There's a trading journal attached to it. I think I'm one of the only brokers out there. I'm sure there's others, but I don't see many other brokers providing a journal. And so, if your broker doesn't provide you with a journal, get a journal. And it specifically answers your question of what do you do at the end of the day. You have to put your trades in the journal throughout the day, or after the market closes if you can do that manually. If you're a day trader and you click a lot, you better work with something that just streams into your trading journal, right? Because it's hard to
Mm.
upload. But you know what happens? Here's what happens. What happens is you're starting to be a better decision maker because you become observant of your decisions. Let me give you an example. Let's say you had a bad week, okay? You traded Monday, Tuesday, Wednesday, Thursday, Friday, and every single one of those days you lost. And now Friday comes around and you say, okay, I've made a lot of mistakes, and it stays in your head, and you think about it, but not documenting those mistakes, you're doing a disservice to yourself. Because within all those mistakes that happened, there could be some golden opportunities, I call them, of reading your mind. Maybe
Mm.
there are certain hours that were better for you. Maybe there were certain markets that were better for you. Maybe you traded 3 markets, but in one of them you won and you lost everything in something else. Maybe there were hours. There's something that a journal detects about your trading that you can actually look into it and have like a map and say, wow, here's my personality, here's all these decisions. It's very hard to know yourself from thinking about yourself. It's all
Mm.
done through actions. So you want to document it. You want to go back and you start thinking about, I've made a lot of good decisions in my life and I made a lot of bad decisions in my life. And I'm talking about both in investing and trading, and I'm talking about personal life and business. But when I make good decisions, I write a lot of what I did right, what patterns I used, how I thought, what I did. On the other hand, when my decisions are not that great, I write down, the things that I've done in the wrong way. But I always write more when I do things well because I want to train my brains to do things well in my decision
Right.
making. And I don't want to write novels, when I make bad decisions, because then you're trading your mind to really make bad decisions because you're writing about, and your mind will start getting attracted to that. So I know in trading journals, one of the things you should do is also have a note section. And in the note section, you should make notes when you make good decisions and write why did you make this decision and write a lot about it. And when you made a bad decision, right? Okay, this was not a good decision. Now, going back to your second question, which is really important, and it's a good question. You said just because it's a losing trade, it does not mean that you've done something wrong. And you are correct. And this is where it's really challenging to distinguish sometimes. This is where experience comes in, and it says, yes, everything lined up. Like a lot of amateurs, for example, would ask, I don't understand. I did what the moving average did. I looked at the RSI. I looked at this. I looked at that, 3 time frames, and I executed trades and didn't go my way. Well, the minute you executed, there could have been a fund, some fund trader that decided to get out of a trade with a lot of stocks, and it affected, for example, the stock, and it affected the futures market, right? The index. Maybe it was just part of the S&P or part of the Nasdaq. I mean, it just affected. So there are things that are happening while you're trading that might affect your decision making. This doesn't, but you were disciplined, and this is where experience comes in. Where you say, look, if I exercise this method over and over and over again, it led to positive expectancy, and once in a while, it doesn't. What happens a lot of the times with beginners is that they don't know where to distinguish between the two. They think that every single losing trade was just a complete catastrophic mistake.
Yep.
And only time, and again, a trading journal would do that because you can say, you know what, I did that trade 30 times and every time it lost the trade. Okay, maybe now there's something you should fix. But if you did it, 30 times and let's say there was a 50-50, then you say, okay, maybe I should improve my risk management, not the method, right? So maybe I can improve my decision making about that product. So,
Yep. I really like the point you made there, Matt, about I think it's human nature at times to really focus on what we're doing wrong and on the negative aspects of or results of our actions. But I like how you said by focusing more on the good decisions that you make, you're actually training your brain to continue doing that good decision. And you can have a quick review of the mistakes that you made or the poor decisions and address those, but really don't dwell on them too long because you're going to, I guess, kind of attract your mind to that. So I think that's a brilliant statement, and it applies, I think,
thank you.
to all aspects of life. Right? It's not just a trading thing. We make decisions every day about all different kinds of things. And I remember actually our discussion off air last week. You made a point about the importance of learning from things or people outside of the markets can actually have an impact on your results in the markets. Can you explain a little bit more about what you mean by that?
Okay, so your question is, how you learn from the mistakes of others? Is that the question? I'm
Yeah,
trying to
and
understand.
yeah, so I guess the question is, what can you learn from people or things outside of the markets? How do you go through that process that can, I guess, improve your overall decision making? Because you shared with me that you study, entrepreneurs and business people and all those types of
Oh,
things,
I see
which
what
have
you
an
mean.
impact on the markets as well. So can you, share a bit about your thoughts there?
Okay, so yeah, what you want to do, it's part of a kind of a mental exercise, is to think about, um, people who take decisions in risky environments. I think your question has two things, so I'll try to answer the first one, then the second. So
Sure.
you learn, so you want to look at people that are totally outside of trading, right? Let me give you an example. Let's say you look at a rock climber, right? So he goes out there and he climbs a rock, and every single move that he makes has to be absolutely perfect, or near perfect, because there's no ropes. He's got only his hands and his legs, and he's climbing something that's very flat. Like, think about the risk taking of somebody like that. How
Mm,
calculated he is on every single detail, right? When I look at those things, it just absolutely fascinates me. I don't have enough courage to do anything like that, of those kind of decision making, not with this body at least. But maybe in the year from after 2023, I'll get on um, better practice. Maybe I'll try it. But going back to it, right? I mean, like think about like the precision they have to do and the risk taken. So every single move they make is so calculated. And so you have to think about things of that nature to learn to be calculated. Or you can look at people like venture capitalists or companies that provide seed capital. Think about their risk environment. They're sitting there and somebody comes to them with something like this, right? Like a phone. Imagine somebody came to them with a phone 25 years ago and is going to say, oh, I'm going to have all those apps and people will talk to one another and even people will be able to send money to one another. And somebody like would say, is nuts. Like he's nuts, right?
Yeah.
So now he's asking you for $10 million. Give me $10 million. I'll build you this thing with apps and everything, And so venture capitalists always face an unknown environment, meaning that, they don't know every single field out there. Nevertheless, they developed some sort of a method to evaluate. So they evaluate the people, their commitment, skin in the game. So this is what I'm saying. When you start being successful, you start developing a certain method, right? And a certain belief system. Or if you look at military people, here's another example. There's a, I become very emotional when I talk about U.S. soldiers because, I mean, there's so much risk that they take out there in the world, and I read about them. But, when I read about their technical implementation, they got to have such discipline because, again, their enemy is intelligent. They have to make very smart decisions. There's almost no room for error because if they'll be spotted or they'll do something wrong, not only did they put their own life at risk, they put the team's life at risk. So I've learned, from people outside of trading about how do they make their decisions in those environments, which helps me in business and investing and everything else that I do. So it's important to learn because I find that people, when they get fascinated with trading, they'll just have a library full of books just about trading, nothing else but trading, YouTube trading, Twitter trading, following 50,000 gurus out there just about trading. But you don't know if they're successful. That's the problem. They might, and the thing that's really hard, and I'm going to get to your second question in a minute. The hard thing about decision making is unlearning. If you have years of bad habits, people will do what they feel comfortable, not what they should do, what they feel comfortable mentally. So if they have years of bad decision making, unlearning the process, it's a very challenging environment, right? Going back to the second part of your question, to understand how people make mistakes in general, I mean, typically the mistakes that you're making, everybody's making. Everybody thinks, that their mistakes are so unique to them. But what you have to understand as a trader is that you're fighting, I was about to say a million, but in reality, it's a billion years of evolution. A billion years. You're fighting. You are getting into a game where you're supposed to control your emotions. And people say, so here's another thing. They say you got to be disciplined in trading. And it's a very vague statement. Of
Yeah.
course, you have to be disciplined, but in what way? And how do you overcome years of instincts, fight or flight, or things of that nature that in trading are amplified? All our emotions are amplified in trading because we don't want to lose money. And so you learn. So the mistakes that you're doing as an individual, everybody's doing. And there's enough people out there, for example, on forums like Reddit, that I'm not a big fan. But people spill their emotions over there like
Yeah.
other people are clinical psychologists. Oh, I lost $500 today. I'm desperate. I don't know what to do. And then they're asking for advice. And then they have a thread of 1,000 people just like them, giving advice. So the blind is leading the blind. It's a complete, a flight over the cuckoo's nest, right? It's a
Yeah.
madhouse. And so I would say, you know what? There are books about, I think, Brett
Steinberger.
Steenberger.
Yep.
Yeah, he understands the concept of psychology. Read his
Hmm.
books, right? He's a psychologist. Again, get your information from the right people. Once you start doing that, you'll realize that the mistakes that you're doing are not just your mistakes, that everybody is mistaken, everybody is doing it. And once you start realizing that, and again, it takes time, you say, okay, I think I have to start fixing, being emotional about my trading. Not one of the biggest thing is not to knowing when to. I know it's a vague statement which I don't like, but you have to recognize at the end of the day, they call it, cut your losses short, but when to quit, when to quit, and it goes both sides. There's a certain, you can lose a lot and you gotta quit, and not because your mental game is not at its best, or you make a lot, and that also where your mental game is not at its best because you're overwhelmed. You're overwhelmed, and maybe when you're overwhelmed, you also, it leads to greed, and I want to make more, and when you feel it, you stop. And again, only experience shows that. So over time, realize your mistakes are everybody's mistakes. What you experience, many experience, but the people who move forward become conscious, they become educated. Again, the things that I said, they start listening to practical people, and hopefully they improve their performance.
Hmm. Hmm. Yeah, actually, you mentioned a very early in our discussion today about understanding the mistakes of others and being able to capitalize on those mistakes. What does that exactly mean in the context of the markets? Like, how can you capitalize on other traders' mistakes?
That's a good question. It is tough because I think it's really hard to read the markets, but just understand, you know let's say, okay, let's talk about markets that are falling. Okay,
Hmm.
what happens when markets that are falling, right? They're falling and falling, and then they stop, and then they fall, and then they stop. Somebody with experience will not try to buy into falling markets all the time, because he knows that amateurs who are buying into those markets, they'll be thrown out really fast, and they'll have to sell more and more and more.
Hmm.
So somebody's intelligent on a day like this. I shouldn't say intelligent. I should say experienced, right? Because intelligence has nothing. Sometimes has nothing to do with this game. It's more of a discipline thing, in my opinion. But intelligent helps. But somebody observant, let's say, they don't try to, they don't exit the markets too fast, because they realize that a lot of people will try to buy and they'll be flipped and sold out. Either they'll get out or the stops will hit, which will lead to more losses and so forth. So when you start understanding how people think, in the markets, which is basically how we thought as amateurs, they take advantage of those situations. Or let's look into a market that's going up, right? There's going to be a lot of amateurs, in my opinion, that will try to short that market and will try to say, this is the top. This is the top. I can't, indicators show one thing, but I know in my heart it cannot go higher, and it explodes higher. And this is where professionals can say, you know what, it stopped. For an amateur, it says maybe it topped, but a professional would say, you know what, I see people here accumulating positions on shorts, and they'll be thrown out, and then the market will go even higher because they will have to buy their positions back. So
Hmm.
over time, you realize, how people behave, and you somehow integrate it. It doesn't mean that you'll be able to take advantage of it daily or by minute, but you could potentially take advantage of it when very large moves occur. Because on those days, those are the days that really kill amateurs. Big up days and big down days. Because they either try to short a market that's just going up and try to call the tops. And so an experienced person, understands how the auction market works, and he thinks about that, right? So think about it. Let's say me and you know, we go into an auction to buy an old Mustang, right? So they start the
Nice.
bid at, right? Everybody likes an old American Mustang, So let's say they're starting the bid at 50,000, and nobody bids, and then somebody raises their hand and they say 55, 60, 65, and here's a person who wasn't willing to buy it at 50. Now he's offering 70, right? And the market, when it goes up that fast, there is that psychology that, people buy into this. So you don't want to stand. I mean, you wouldn't be in an auction when the car gets to 65. Let's say, hypothetically speaking, you were able to short it, right? You wouldn't call the auctioneer and say, I'm shorting it, right? Because it's going to go up. The
Yeah.
markets have the kind of this, a very similar attribute to that. It behaves in a certain mechanical way. And once you know how the amateurs, will behave,
Mm.
or the people without the discipline, this is where you can come in. And I'm not saying you necessarily, have to be careful with capitalizing on their mistakes, but instead you're saying, you know what, I'm not going to make those amateur mistakes. And starting to eliminate your mistakes, that's already part of better decision making.
Mm, yeah, but I think you can see that type of behavior in the markets of fear and euphoria and madness extend for a lot longer than you expect, right? And these types of conditions can go on for years, I guess. And I think
Correct.
you need experience and time in the market to recognize that that's what happens. What about if you're kind of a newbie or a beginner in the markets? How can you protect yourself from things like that?
I, I don't necessarily know if you need to protect yourself from that.
Right.
Maybe you need to just trade what you see.
Mm,
Overextended markets. You know what? Before I talk about the markets, let's talk about something else, just a little bit different.
sure.
Okay, it's just for entertainment. Back in the day, between the 1200 to 1500, 1600, there was those people called alchemists, right?
Yep.
So they convinced everyone that they can turn copper into gold, and they took advantage of kings and aristocracy and anybody who had money, and they said, you know what, we can do it. So they pretended to be those chemists and do it. And that lasted 300 years, right?
Wow.
That lasts imagine you had an index of an alchemist. If you tried to short an alchemist index, the hypothetical, I mean, you would lose for 300 years. So, you know, when there's euphoria in the market, you have to trade what you see. You see long markets, it's long markets. You trade short markets because you don't know, you don't know how long something lasts in terms of a good market or overextended market, because it can be years. And I've seen traders, unfortunately, that said, like if you try to, like for example, now trade against the Fed, you know, if you're saying, he's not going to raise any more interest rates, and he kept on raising and raising and raising. So if you traded instruments that are related to that, right, it's very hard. So I don't necessarily know how to protect yourself. All I can say is that you have to trade what you see. You see down markets, they're depressed markets, and they go lower and lower. You have to trade them that way. You see higher markets, you have to do it that way. Now, two-thirds of the time, the markets are not trending. So even in an up market, an upbeat market that keeps on going higher, or down market that goes lower, there'll be a lot of days that are, in between,
Mm,
that are not trading, right? You have to learn as a day trader to deal with those markets and not try to, you know, you can have an up day in a down market, you can have a down day in an up market. So I don't have a pill to protect yourself with something like that. I just have to say you trade what you see.
yep. So then, does that then imply that like a contrarian approach to trading or investing is dangerous?
Um, I'm not a big fan of contrarian trading. I don't think it's a quantifiable theory. I know there's a lot of people could disagree with me on that, but you know, so a contrarian sometimes can use it as a partial strategy. Like you're long the market for 5 years, it gave you way above average return, so you decide to exit early, right? You decide whatever asset you were trading, you decided to exit early. So knowing fully well that this market can keep on going higher,
Mm,
right? Or if you're in a down market, right? If you're in a down market and you shorted something, and you were not long, let's say you were short, and the market just keeps on collapsing and collapsing and collapsing, and again it gave you some sort of above average return. But to have contrarian trading as a philosophy of trading long term, I really don't think it's implementable. I don't think it's
mm,
something that's quantified. Now, it's a fascinating thing, right? Because it's a fascinating thing in the trading world, because it's so easy to say, look, the crowds are wrong, do the opposite. Yeah, but the crowds are wrong for a very long period of time or a short period of time. So
mm.
timing that period, it's extremely, extremely tough. I mean, I think the Japanese market has been down for 30 years.
Yeah.
I think recently, I mean, there was a period that it was down for straight. Now, here's the interesting part. In between, there were insane rallies. In between, there were just huge rallies in the Japanese stock market. But so when would you be a contrarian on it, right? So for me, I'm sorry, I'm not a big fan of this philosophy. Sorry.
That's okay. No problems. Now, I just want to ask you about you made a statement before about you have to know when to quit. And it got me thinking about how do you know when not to start? I don't know about you, but I've got some friends who, they're nice people, but they're very slow in their decision making. And I imagine they may or may not be good traders. I'm not sure. What do you think is, if you're a poor decision maker or a slow one, or you can't handle risk or things like that, do you think those factors should maybe stop you from being a trader or inhibit you from being a good trader?
Well, as I mentioned, everything is an evolution, right?
Mm,
Everything you can start one way and you can evolve to do things in a different way. But I would tell you this, I've never met a good trader who's a poor decision maker.
mm,
You just have to find a method that fits your decision making strength. If you're not a fast decision maker, it's very hard to be a day trader. Maybe it's better for you to be an investor, and just you have to recognize, like, if you're overly calculated, like my father is an engineer, is an overly cautious and calculated person. He's a very successful person. He's a good person. But I didn't inherit his DNA, for example. I'm a much
yeah,
faster decision maker because I'm comfortable with that. Some people need to sit and think, clearly about their decision makers, and usually they, like engineers need to think about that, or programmers. And then there are people who work in environments that are just fast decision makers. You
mm,
know, some of them could come from other areas. I don't know exactly what, but it's somewhere where they relied on their intuition much faster than something calculated. So really, you have to, like I said, trading will amplify your weaknesses. It always does.
mm,
But you can bring your strength into it, understanding the weaknesses that you have, and adjust accordingly if you can. But one thing I would say for sure, trading is not for everyone. That is 100% for sure. That I know. Because and you know what? And so what? Look, I mean, there's some people that are built for it, and there's 1,000 other avenues of success.
mm,
So nobody should, and here's another thing. There are people. Let's say you love day trading. Let's say you love it, and everything tells you that you're not a fast decision maker. Well, guess what? You can day trade one day a week, or you can do one transaction a day, or you can do 10 transactions a day instead of 100 transactions a day. You can adjust what you do according to your nature, and then at the end of the day, see if you're comfortable in that environment, evolving in that environment. And if you are, great. And if not, then listen, you call it quits and you say this is not for me, and it's
Mm.
fine. It's not like there's 1,000 ways to be successful in life. Trading is just one of them. So and I feel comfortable saying it because I want to help people who want to succeed in this game, but I also don't want to dangle, the this sad reality of people today following TikTokers in Lamborghinis that they rent for a day when they live in their mother's basement, right? So their
Yeah.
video is just from productions and selling things, they couldn't trade their way out of a paper bag, right? So I don't want somebody who got into it to be, it to affect them. So
Yeah. Yeah. So I just wanted to, we'll start wrapping up here in a couple of minutes, but I wanted to ask you. So you've shared a lot of, or you've shared some approaches to how to improve our decision making. But are there any books or other resources that you can point people to that maybe if they wanted to, improve their decision making, they could use those as a reference point?
um I wrote here, just let me see. I think that was, there's a bunch of, look, I'm going to answer it that way. There's a lot of books out there about successful people and how they approach things. You can learn from every single one of them. You can learn from people who are venture capitalists. They have podcasts. Look, listen to venture capitalist podcasts. It's not only books. Or just intelligent and smart people, how they go about making their decisions. Sometimes you can borrow things from them into the trading world. I definitely, did it in my business. A great I read recently three good books, which are, it's called The Great Mental Models. So it really, really it brings disciplines from other areas such as physics and biology and everything else kind of into the way of thinking. So you have the great mental models. That's the recent one that I've done. I have here a huge library of books. I read all the time. And again, read about successful people, people who built companies, people who took risks. I mean, even if you read about a rock climber, it could give you some
Mm.
insights there. Could be this one sentence. Seriously, it could have this just one sentence that will be an epiphany, and you would say, "Wow, I never thought about it this way. Maybe I need to apply it." Right? So, trading is really it's an art and a science. You know, you the beautiful thing about trading, which I've always loved, although I still say it's not for everyone, that it just combines so many challenges. It combines tactical, strategical, psychological, emotional challenges. And nobody can get up in the morning and say, the next morning and say, I know the markets. You only know them up until the last time you traded. Those are your
Mm.
conclusions, and tomorrow is a brand new day. And it's just a challenge. One thing I wanted to add that I didn't think I addressed in the decision making, which I think I should because it's important.
Sure.
You know, everything that makes money, you solve a problem. In everything in life where you make money, you solve a certain problem. In trading, you have to solve a problem. Maybe you solve a problem of overevaluated markets, or markets that are depressed, or anything else. Nothing. I mean, you could solve the momentum issues, but there's a problem that you solve, and once you recognize that there's a problem that you solve, then then you can start saying, okay, what tools do I have, and start making decisions about it. And one thing I wanted to say is that in anything in life, which, and especially in trading, making money is a byproduct. Just remember that it's a
Mm.
byproduct of all your decision making. And never forget that, right? Because they think the primary goal in the market is to make money. Your primary goal is to make good decisions. We could have another episode, about risk management. Maybe one day we'll do it. Um, but applying risk management techniques to that is the result. Money is the result of those things. And when you don't make good decisions and you don't have good risk management and you apply tons of emotions, and I use the word tons of emotions because I don't think you can completely eliminate emotions. It's
Mm.
impossible. You have chemicals, you have emotions, right? Some people say, yeah, I don't want to be emotional. No, you'll be emotional. You will learn to apply things regardless of your emotions because you think that it's working. That's what happens over time. Your emotions don't go away. You just do this. I don't care. I'm not adding money to a losing position like I did,
Mm.
10 years ago when I started because I thought, oh, if I add money, it will be easier for me to break even. You don't have those thoughts anymore, right? So that's what it is. What was the question again? I'm sorry.
I don't know, but that was an excellent way to wrap up the show. So inspiring. I think you put what's the saying? You put a bow on it. So I think the
I
question was about books, actually, now that I remember.
Oh, books. That's
Yeah.
right. You asked me about books. So the last questions you have to ask me is, anything else that comes up. Okay. So I'm
Yes.
going to ask myself, is there anything else?
You
Because we're
ask
near the
yourself.
end. Okay. Because I wrote it down.
Okay.
So I'm going to ask
Excellent.
myself the question. Andrew, you can take a break. I'll continue
Okay.
from
Thank you.
here. No. So, first of all, okay. So here's the thing. Be patient. Don't be obsessed with trading. I wrote here, well, I believe in goal driven people. You need to learn everything, that it takes time, right? It takes time to evolve to be a good decision maker. So be slow, be methodical, learn as you go, don't overtrade, right? That's what it is. So, trading is not I wrote here, it's not about posting your success on social media, on Reddit or Twitter or Instagram. Um, as I mentioned before, you have to be accountable to yourself and make it all about yourself. It's a lonely. I always say trading is a lonely world, and it should be lonely because it's just you against things. So let me see if there's anything else before we wrap up. That I took a lot of notes. Um, that's something that's that would be crucial to your guys because I don't want to leave them with any
Sure.
misinformation. Let me see here. um, we discussed this. um,
I think you did a great job today, Matt. You shared so much insightful knowledge with us. So I'm sure everyone is
well,
um,
I hope that it
thankful.
helps.
Yeah.
Look, I mean, there's I'll tell you this. So I also want to give people a break. So here's what I would say. We have a community forum. It's called community.optimusfutures.com. If you go there and you register and you ask me a question, I will answer it. It could be anything you want. There's no such thing as bad questions. Everybody has to start somewhere. Um, as the more years I'm in this business, the more sympathetic I am towards beginners, because when I started, there was this much information, and today there's this much information, and to filter through all of this is the difficult part. So when I started, you know, Google just maybe started somehow, right? But I would go to a bookstore, get a book, usually somebody who wrote a book, not always, not nowadays, it's more for promotions, but back in the day, somebody who wrote was, they were really good books. So I used to sit there and I used to read it. And today people are just overwhelmed. And the one thing that has become sad, and it's all of us, myself included, is that we filter information, we
Mm.
scan information, we don't go into depth. We just scan kind of things, and so again, go to community.optimusfutures.com, post your question. If you're looking for a future broker, I'd love to earn your business. So it's optimusfutures.com. We have our own trading platform. And again, I want to end with a risk disclaimer that there's a substantial risk of loss in futures trading. Past performance is not indicative of future results. And on a personal note, I wanted to thank you, Andrew, for having me here, and everybody
Thanks,
who
Matt.
attended. I wish you the best of luck.
Yep, excellent way to end the show. And I can see there's a couple of questions in the chat here about risk management and other things. So we're over time now. So maybe if they go to the community.optimusfutures.com and they can ask you directly there. So thanks a lot for your time today, Matt. It's been great chatting to you, and you've shared so much great insight with us. I'm sure everybody is thankful for that. And I wish you all the best. Have a nice holiday break.
Same here. I wish you guys all the best as well. Thank you for having me, and until next time.
And good luck with your rock climbing next year.
Thank you. Thank you.
All right, cheers. Thanks, everyone. Have a good one.
Okay.
Okay, bye-bye.
Bye-bye.